For the full year 2017, your group net income was at 2.8 billion euros. That's down 27.6% compared to 2016. You had some exceptional items and also, of course, a very challenging second half.
Well, first of all, let me say, putting aside the exceptional we had been disclosed, we finished the year with very good performances and actually above the expectations of the market on all our businesses. And overall, when you look at the underlying performances, we have a growth of NBI by 0.5% for the full year and an improvement of the underlying profitability. So beyond the exceptionals, I think this year is a very positive step forward in terms of transformation of the businesses with good commercial performances and robust underlying financial performances.
Looking at your investment bank and, of course, fixed income and equities, the second half of 2017 was very challenging in terms of market environment. Can you tell us about this and how do you see the situation evolve in 2018?
Well, first of all, fourth quarter, we do better than our peers. It's a very modest decline in still a low volatility environment. And all in all, when I look at the full year, at least compared with the banks which have already published their figures, we are doing better. Our decrease is lower than the others. So it means somewhere that we are gaining market share. And if you wish, it seems to me at the beginning of this year that, at least when I look at the markets, we are progressively probably getting out of these extraordinary monetary policies, which probably also meant low volatility with a lot of money available. So I'm pretty confident with the capacity to deliver our business plan, which is a sustainable growth and a profitable growth of our market activities.
So you expect the volatility to really benefit SocGen for 2018?
Yeah, and volatility, more conviction maybe by investors, more flows. So yes, I'm positive. Overall, I'm pretty confident that if you wish, beyond the turbulences that we today see in the markets, we have good growth prospects, in particular in Europe, and overall that yes, we see signs of exiting these monetary policies which hurted both the retail banking activities with the rates and of course the capital market activities with a very low, historically low volatility.
So if this volatility increases in 2018, as we've seen over the past few weeks, does that mean that you may reach some of your targets quicker than expected?
It's a little bit too soon, listen. And the targets do not just depend also on the environment. We've just released targets 3 months ago. We are committed to deliver in the first year, a successful first year, in terms of execution of our strategic plan.
Has SocGen been structuring or selling some of these products linked to volatility index that have been collapsing over the past few days?
No, we did not have to suffer that kind of consequences.
Looking at revenues last year, of course, they were under pressure. Does that mean that somehow you want to compensate with a bigger bonus pool? Is your bonus pool going to be stabilizing or increasing?
No. The bonus pool is following the performances, so actually it will go down in line with, as I've said, pretty good in relative terms performances, but in absolute terms still slightly declining. We are very responsible in terms of pay, and at the same time, our people, they look at the potential of the group, they look at our ambition, they know we want to invest, and again, the beginning of the year and the prospects are positive for our capital markets and more generally, our wholesale activities.
Does that mean that you don't see any job cuts in your investment bank in Paris for this year?
I mean, we've not disclosed anything specific. We've made a lot in terms of improving the profitability and efficiency of our investment banks, and it is translated also in the terms of the very disciplined evolution of the cost. There will be a permanent adaptation of our businesses, but again, nothing specific regarding the CIB business.
Are you planning to use, for example, the new labor reform from Emmanuel Macron in France in order to facilitate perhaps some departures?
Yes, it's public, and we've said that we have entered negotiations with our trade unions to use effectively this more flexible tool to adapt the retail bank. And of course, with a very strong dialogue with the trade unions, because this new tool does not mean that on the contrary, you have to explain to the trade unions what you want to do. They have to support and vote for it. I'm confident that we'll be able to implement that. And at the end of the day, it will allow us effectively to target where really we need to adapt if there are voluntary departures. I just would like to again remind people there will be no departures which will be imposed, of course, to people.
Your French retail bank revenues were down 1% in the fourth quarter, down 2.9% in 2017. Can you give us an update on when exactly you expect this return to growth, and do you see an effect of President Macron?
First of all, let me highlight the very strong commercial performances of our businesses in French retail last year, in 2017. An increase of credit production by 18% to corporates, compared with 2016. 4,500 new corporate clients for our Societe Generale network, or an increase of 30% of the clients of Boursorama, up to 1.3 million. So very strong commercial activity. Yes, we see a better, obviously, growth in France. Look at the figure for 2017, around 1.9%, much above the 1.3 that everybody had in mind beginning of 2017. And something like that also in 2018. So yes, there is more confidence. And of course, it means for a bank like us the capacity to accompany our clients in their different projects, in particular the corporates, to invest more. We saw that in the fourth quarter, and I'm confident to see more investments going forward that we will, of course, finance.
During your investor day 3 months ago, you said you were going to be proactive in terms of managing your portfolio of assets. Does that mean we're going to see perhaps any disposals of assets?
As I said, we have identified a way to optimize the capital allocation within the portfolio. We have started to work on this. As I've said also, I will not communicate ahead of anything because it would be a way to destroy value.
But you believe in a consolidation of the banking sector in Europe. So how will SocGen take part in this consolidation going forward?
I don't think it's today the priority of banks management, and certainly for us, the priority is deliver our strategic plan. There's a lot to transform, and it will create a lot of value. As we've said 3 months ago, in 10 years' time, there will be probably less banks. Our whole priority and strategy is to be in a position of strength when it will happen, if there's an opportunity to be able to size it. But again, I don't think it's the priority today.
SocGen took an extra 200 million euros in provisions, which brings the total of provisions of SocGen at 2.3 billion euros. Could you tell us where we are in terms of using some of these provisions? Are we coming to an agreement soon on some of the cases?
There is nothing new regarding the 3 litigations of the past that we have to settle. What I can confirm again is we have the objective to put these litigations behind us in the next weeks or months. So it means relatively shortly, hopefully.
Relatively shortly, does that mean before the next quarter?
Next weeks or next months.
Is that going to be for the Libor or the Libya cases in the US?
Impossible to say.
You have started discussions then on the OFAC.
Impossible to enter into the detail. Again, as I said, for the 3 litigation, there's a capacity potentially to put that behind us in the next few weeks or few months. It does not just depend on us.
Also, are you trying to reach some kind of tax settlements in France following this tax credit of 2.2 billion euros that SocGen got related to the Kerviel case?
First of all, let me highlight that the tax deductibility is, in our view, absolutely valid when you look at an explicit opinion of the highest court in France, made in 2011, and further opinions delivered in similar cases. So that's why we did not decide to provision anything. What we received is effectively from the Minister of Finance a proposal to potentially call into question the tax deduction. But it's not a tax adjustment, and the tax adjustment will happen just in due course when effectively we will be able to, if you wish, use the losses carried forwards, which means in many years. So it will not happen immediately. If, again, the administration were to confirm at that time the position, we would challenge this position in the court because we have, I think, a very strong case.
So basically, it's going to take years before we see any of this money back.
Absolutely.
Finally, your dividend is at 2.2 euros. This is according this is in line with what you said in terms of target. How do you see it going forward? How are you going to return more to shareholders if you can benefit from this positive outlook this year?
When we communicated at the end of last year, we also communicated about a dividend policy, have as a reference a payout ratio of 50%, with a floor of 2.2 euros per share. We are just implementing in 2017 this policy, and we will implement that in the coming years.